Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for March 6, 2010. So the main thing to really take away for this past week is to always look at price action and support and resistance as your primary indicator. Most of these secondary indicators, such as the MACD, stochastic, they're all secondary indicators. Now, even though we are screaming overbought and the MACD is showing divergence, the market continues to go higher. Okay, so you can't deny the fact that the market wants to move up, given that these are still showing that we are in extreme conditions. So always pay attention to what's going on with the price first, and then use the secondary indicators as either confirming or unconfirming of what you see on the charts. I rarely use these indicators as trade signals. For example, if the market is showing overbought, I wouldn't necessarily short the market, but instead I would use this as a risk indicator telling me to be cautious when going long, because we are getting a bit stretched out in the market. The other thing to really pay attention to is confirmation. Now, I know earlier this week we had a few small body candlesticks, possibly even shooting stars, but it never had any breakdown of this support level. So there was no confirmation that the market wanted to head higher. Instead, it managed to hold at the support at 112 and had a major short squeeze on Friday. So confirmation and price action should really be your primary thing to look at whenever trading the market. So what's going to happen next week, right? We are very close to retesting this previous high at 115. Given that we had a huge, strong white candle on Friday, there's a good chance we might get some follow through. Simply because, well, there's really no sign, no reversal candlesticks that tell us that the market is ready to turn around. The other thing that I this could possibly be is a capitulation type, some type of blow off move where everyone who wanted to buy has bought already on Friday. So, but again, even if that is the case, we still haven't seen any signs of reversal yet. Next, going into an hourly view, the main thing that we want to notice is that even on an hourly view, the stochastic is overbought and there is MACD divergence. So overall, given the short-term and long-term look, the market is expected to make some kind of pullback. I would expect a retest of support. Gaps are always great support and resistance. And in this case, we have 113 and 112 as the next major support levels. So if we do get some kind of profit taking next week, I would look for these support levels right here. Okay, next we turn our attention to the VIX. The VIX is telling us that the market is getting very complacent and just very, very bullish, very one-sided. You can see how we are pretty much back here down in the January lows. That's when the market made its previous top at 115. So, and the VIX is also showing that it's very oversold, and there's also some bullish MACD divergence. So all this is telling me that the market is getting very exhausted towards the upside, and it's getting very one-sided. So all of these signs, the oversold VIX, overbought markets, all kinds of divergence going on. All that is telling us that the market is getting kind of exhausted towards the upside. But yet, when you look at the price, there hasn't been any confirmation or signs that the market wants to turn just yet. So as far as next week, I do expect some kind of consolidation pullback, just so the market can work out these extreme overbought conditions. But always pay attention to where it pulls back to around the 113 or around the 112 area. I will look for support around that zone.